It's David here. I'm just doing the London recap this morning on EU and AU. I'll go through my thought process and hopefully it might learn something from how I saw the markets. But no trades for me. It's pretty messy price action overall, so I'll go through it all anyway. So on the daily on EU, obviously we've had the break of structure, so now we're expecting the pullback possibly towards the EQ of the leg. But so far you can see it's pretty corrective pullback. Every time price sort of took the high, it was retracing. So I was thinking sort of yesterday that it was possible that we're just going to tank from here without mitigating the EQ. But yeah, you can see time and time again on the daily the price does tend to pull back and mitigate the EQ. So it would be no surprise if you do pull back to here, which would obviously give us some bullish opportunities on the M15. But yeah, so pretty neutral in the daily. Happy to I'm aware the price can sort of go either way from where we're sitting currently. So no massive bias in either direction. On the 4 hour swing is obviously bearish still. That's the swing high, and this is our current swing low. So this is basically all the pullback. Again, we would expect probably pullback to the EQ of the leg. On Friday we had the sweep of liquidity and mitigated this supply, and then had a huge V-shaped recovery. So sort of coming into the week, I was pretty much expecting this all to get run, because like you can see there's liquidity there, it's a week low, it made perfect sense. But then what happened was we had the bullish IBOS, which was here, which gave us this whole demand range, and basically the extreme of that range held at the wick there. So and then with a decent amount of bullish momentum at this point. Obviously we come into this supply, obviously it's a decent zone, caused a shock, a lot of momentum to the downside, swept liquidity. But then yes, it's a decent POI, but it is possible that the shock was only to facilitate the mitigation of the extreme demand. Then we had a pretty strong V-shaped recovery up. So while it was possible the price could roll over to the downside from here, I was aware that basically the internal structure could hold, and basically we would continue up sort of around here. Coming into session this morning, to be honest, I favoured buys over Anna, purely because we had this impulse up, and then price is pretty much just ranging sideways, having mitigated this demand. So Annie's, wherever a member of Falcon or understand that strategy, is impulse, correction, impulse. So at that point I was thinking probably favoured buys overall, but being aware that we could roll over to the downside as well if we get clear signs of bullish and bearish intent on the M15. So yeah, according to 4 hour, favoured buys to potentially target the EQ of the 4 hour and daily legs. The M15, coming into the session, obviously this was the swing high, this was the swing low, so this is basically all the M15 pullback. Yesterday afternoon we mitigated this supply in the premium of the leg, that's the EQ, so it's in the premium. So I was aware that it was possible that we could roll over to the downside here, because obviously with a pullback what you're expecting to do is mitigate supply in the premium or demand in the discount, and then for the trend to continue. But the internal was bullish coming into London for me. This was the protected internal low, and this was the weak internal high. But it's quite messy overall, because we have mitigated this refined demand within sort of range, and then price was pretty much just ranging around through the night. So overall, I probably, given, on the 4 hour I sort of favoured buys, so overall here I was expecting buys as well. I'll just use bar replay here to go back to sort of pre-session. So it's sort of 6:30. So coming into session this morning, I favoured buys to the upside, obviously expecting this low to hold, but obviously this demand had so far failed to follow through, so it wouldn't have surprised me basically if we swept this here. And personally, price is range bound, weak structure on both sides. Like this low is weak because it failed to take out this high. This high is weak because it failed to take out that low. This high is weak because it failed to take out this low. Yes, it took out that one. So personally, coming into session this morning, I was just waiting for price to commit either way. I had no real end. Like whenever price is range bound like this, you're at the EQ, literally bang at the EQ of the swing leg. When price is range bound like that, I just basically don't want to try and call it either way. I'm happy just to sit my hands and wait for clear commitment either way. So let's play this through. I know some of you were looking for sells in here. Just not a massive fan of that really, because it's in the middle of a range. It's like this high is weak, this high is weak. Yes, it took out that low, but what did that low achieve? This low didn't take out that high, so it's just weak structure everywhere. So personally, I have no interest in forcing things, and I'm quite happy to wait for price to sort itself out. There was a decent sell. We came down here. You can see the extreme of this low held. Now, I think some of you were marking up basically trades from this M15 demand. That's not valid demand for me because it achieved absolutely nothing at that point. It did not take out, it didn't cause a chock, it didn't cause an IBOS, didn't cost anything because the chock was there. So that's not valid demand for me. It didn't cost anything, so there's no way I'm looking for an M1 entry within there. But then after that, I think so price shot up. We got the close above the M15 high with this candle here. So at this point, this becomes our strong internal low. So this was the obvious demand. This was where the momentum came into the market to cause the IBOS. So I was looking to see if potentially price was going to pull back in here and then look for a continuation to the upside. But there was no inducement in the leg. You see, it was a straight push. I think it was caused by the German CPI news announcement. It didn't sweep liquidity really. You could say it swept that inside bar, but there's that I think they're perfect equal lows if memory serves. 820, 824, yeah, so there's 0.4 pips, but like there's a lot of liquidity sitting behind there. It didn't sweep liquidity and it has no inducement, so there is plenty of reason to be cautious there as well. And M15 is still bearish overall, but price didn't pull back in on it during the session. So I'll drop down to the M1 and go show you some potential entries. But yeah, there was nothing in the M15 for me. Pretty much just waiting for it to sort itself out, which it eventually did whenever we got the close above here with a sign of bullish intent. But then didn't pull back into any M15 demand, so no trades for me. If you wanted to be aggressive and you like that M15 demand, there was a couple of entries here. Again, you can see there just how pearly that high formed. That's basically, it's quite a rounded high. You know, it's not usually whenever a high holds, it's like you want to see in and out. It's like a single candle, whereas this here you can see price sort of just sort of pushed up, rounded, and then sort of came to the downside, which isn't necessarily a high you want to be trading from. But again, if you really like this level, obviously it caused the shock there. It's a flip as well because it reacted to the demand in that inside bar. So if you want to be aggressive there, it makes sense to leave an entry there, but just wasn't a fan of the overall area and was waiting for clear intentions. There was a confirmation entry as well, basically, where you got the bearish chalk there and then you could have entered in the extreme. But again, not something I was personally interested in. And then in isolation, this entry model was pretty clean. Mark this on. You got the flip. Flip, chalk, yeah, like it's pretty clean entry model in isolation. Flip, chalk, sorry, and that's your failed reaction, obviously. But you had the V shape like in the flip swept, so in isolation, yeah, the entry model, enter there on the extreme, and yeah, obviously on this occasion it would have played out. But remember, there was absolutely no M15 demand within here, so personally I trade from the high probability POIs, and there was no M15 POI there. So because this candle, it didn't cause a chalk running, so that wasn't valid for me. But yeah, in isolation the entry model was pretty clean. But if you're gonna take trades like that there based off not even a really clear M1 POI, it's like you're going to take a lot of hits. So yeah, the entry model is clean, but I wouldn't count that as a trader on because there's no M15 POI there. Let's do a quick little New York forecast. So obviously you're still shooting to the upside. This sort of POI here to potentially look for a buy. The order flow is obviously bullish at this stage. The 4-hour internal is bullish, so it's very possible that the M15 could switch bullish, and this high basically get run. We have this sort of M10 extreme. You can see it's a engulf candle in the M10. Again, not the cleanest, but you could aggressively look for a sell in that. But personally, given that the 4 hour internal is bullish, the extreme of the 4 hour demand range held, I'll be exercising caution here, and we'll probably wait for basically the order flow to shift bearish, because at this point there's a very good chance that basically the 4 hour internal trend is going to continue and pull back and facilitate the 4 hour and daily pullback to the EQ of the leg. So absolutely, just because the M15 is bearish, you don't have to try and sell from every valid M15 POI. You know, it's like, it's perfectly okay to wait for the shift in order flow and then trade in line with that. But yeah, just I will consider buys from sort of here, even if you come back down. But again, reason to be cautious there with the liquidity behind, no inducement, etc. So yeah, I will take buys in anticipation of the 4 hour trend basically continuing in the M15 switching bullish, and then if we get sort of clear signs of bearish intent, like an order flow shift from this supply, then I will happily take sells. But yeah, that's EU on it. No trades for me, pretty much sitting on my hands most of the morning, and then didn't get an entry whenever we got the clear signs of intent. AU then, yeah, the daily is getting pretty complicated at this point. Overall, the swing trend is bearish. Swing high, swing low. Obviously, this is all the pullback. So obviously, with a pullback, you expect to mitigate supply in the premium and basically continue bearish. But so we could conceivably roll over from here. But the larger internal is bullish for that IBOS. So this is basically one big valid demand range. However, within that, we had this sort of range here, which directly led to the IBOS, and you can see we got the close above it. Now, as where it gets a bit messy, we pull back into the supply, push down, but failed to close below this low, and basically swept liquidity into this demand here. So again, it is possible we could continue higher from here. It's like, it's overall, the expectation is that this will get run, but at the moment it's pretty unclear in the daily, haven't swept this low, because it's possible that basically the larger internal could hold, and that we would basically push up higher, and we still have this demand and the supply in the extreme as well that we might want to mitigate. But it's getting pretty complicated now. Basically at the moment, it's still probably favour sells, just in the kind of this range getting taken out, and bearish overall. But obviously we react, don't predict, and the daily can take a long time to play out. 4 hour obviously is now bearish, which obviously lines up nicely with the daily. Swing, we finally got the close below the low here. This was the bearish IBOS, so this is our 4 hour protected internal high. Obviously we mitigated this sort of wick, which was within the daily wicks, and got the pullback. So obviously knew it was possible following the bearish boss, so we're going to get a pullback to the EQ of the leg, which is here with this supply that lines up quite nicely with that. Obviously it swept liquidity behind the high there, and this is the protected internal high as it caused this IBOS. So coming into session this morning, basically it was the same thing as an EU. Basically looked like we had the correction impulse, so I was pretty confident that the next leg was going to be to the upside. So I was happy to look for buys in the M15 to potentially target up here before flipping my bias and sort of looking for sells. So yeah, 4 hour bearish in line with the daily swing, but obviously in the sort of pullback phase following the break of structure, so looking at it, the potential for buys, sort of take advantage of the pullback. The M15 then, see, this is the swing low, this is a swing high. Yesterday we had mitigated this supply in the premium. It was literally just at the EQ. So at this point, when we got that sort of V-shaped recovery, it was possible that basically the pullback was over and that we were going to continue bearish. But internal is still bullish overall, because this is my larger internal structure. This was the sort of most recent significant demand range that was still being respected. Then obviously after pushing down, we sort of range sideways through the night, and then we got this sort of IBOS. Now at the time I was thinking that as we're sort of bearish overall, 4 hours heavily bearish, I was thinking that it was possible that this range could hold, and that basically we would maybe mitigate this supply. You can see it swept liquidity behind those sort of equal highs, so I was thinking it was possible it could roll over the downside from here. But equally I was aware that this could have basically been just building inducement for this demand, as you can see it was a straight push, so I wouldn't be too keen on trading from it from that reason. But then we sort of built the liquidity in front of it there, and then obviously just another little equal low in front of it, and then swept into it. And then during Asia, we got the bullish chalk. So coming into session this morning, overall favoured buys, just purely because of how the 4 hour was looking, with the basically pretty sideways price action, sort of unanticipating the price was going to mitigate here. But overall favoured buys, but then was trying to stay neutral as everything's pretty bearish overall. So at this POI that basically caused the chalk was waiting to see if we might pull back into it, but we didn't mitigate the pivot. But basically we had this little sell to buy candle there that basically held, and then I'll just use bar replay. Yeah, so basically at London Open we had the push up, so was potentially looking for a sell within here, but swept liquidity. It's pretty clean. It led to sort of II boss, but there's no inducement in the leg, so there was reason to be cautious there. And then when we got this sort of lot of momentum in, there was definitely reason to be cautious. There was no entry model in the M1 anyway, because basically the chalk line was very low down because of the momentum in. But then I'll just play it forward here. We got a bit of a decent reaction again. Favouring buys overall. I was looking to see if we would maybe pull into here to look for a buy, but we mitigated the range but didn't hit the refined pivot, so there's no trade there for me. And then obviously at this point, when the reaction to this supply field, at this point you're sort of thinking, right, there's a very good chance that we're going to run this weak internal high. So happy to look for buys, 20 valid M15 POIs. Again, we got the close above here, so this was your valid demand to look for a buy. Didn't pull back into it. Again, sort of wicked the internal high a bit, which isn't ideal. It's just, wouldn't be the biggest fan of these POIs because they're just sort of single candle. But I don't think price pulled back into them anyway. So yeah, and then we come into this sort of flip zone here again. You can be aggressive with it if you want, because it's a valid flip. You can see you had this sort of range, and then we got the reaction failed. Now it's only a wick, so it didn't sweep liquidity. No massively clear inducement in front of it, so you'd want to sort of be pretty cautious with the entry model. And then just the sheer amount of bullish demand on the upside. It's like, I don't know whether it's my old age or whatever, but I'm sort of getting more conservative, and I'm a lot more inclined to sort of just wait for the M15 order flow to shift rather than catch the reversal, because like this is where, whenever I've sort of less experienced this strategy, it's these sort of scenarios where I would get caught out all the time, where basically I'd be saying M15's bearish, so I'd just be like, oh, it's bearish, so the next leg has to be the downside. And it's like, I would literally be just trying to sell every single one of these POIs, and it's grand. It can work, and it is possible the price can tank here, but what happens is you end up taking a lot of losses and break evens. Because say you get in there and then you take a break even, and then price mitigates this, demand pushes up, break even, and then you don't really understand why, because when you're not considering the order flow, you're sort of thinking, oh, but the M15 is bearish, the low had to go, and then it's the same. You might get in here, a lot of momentum, and then you end up taking a loss, and sort of in one leg of price you can end up taking a lot of losses, whereas the safest thing is just to wait for the M15 order flow to shift. And then when that there happens, when you have the internal structure and the swing structure aligned, like that's when the absolute no-brainer easy trades come, because you're basically trading the internal trend, targeting the swing low. It's like they're the conditions that you really want to put the foot down and wait for, because like I have no real heed on trying to force things in here. I'm more than happy to wait for the market to show its hand. Just got this. So yeah, we can see we're getting a bit of a reaction to this supply now, but yeah, it remains to be seen how big that follow through will be. But 4 hours still bearish overall, so coming into New York, or the M15 is still bearish overall. The 4 hour is bearish as well. Yeah, swinging internal is bearish. So we're coming into the 4 hour supply at the extreme of the protected internal range in New York. So there is this pretty clean M10 POI at the extreme. You can see it's a clear engulf candle. So if you want to be aggressive and you want to try and call sort of reversal where price is going to continue lower, this is where you sort of want to take the chance here. I'm happy enough to just wait. I'm going to think that this is just a short-term reaction before pushing higher, and wait for the market to show me that it isn't. Up here I would be inclined to be a bit more aggressive, because obviously the M15, the 4 hours bearish, it's extreme of the 4 hour internal range, extreme of the M15 swing range, so this has to hold if the bearish trends are to continue. So here is where I would be inclined to be more aggressive. But yeah, coming in New York, if we pull back into any of these sort of valid demand zones, then I will sort of I would look to take some buys. But yeah, overall I'm just sort of happy to sit my hands and wait for AU to show me the path, because AU especially, I try not to force it. I'm quite happy waiting for sort of the high probability trades rather than trying to be more aggressive and trying to anticipate what's going to happen. I'll show you the M1 as well. See here, there was potentially like an M1 entry there, but like that's just about as aggressive an entry as you're ever going to see. It's yeah, we got the chalk behind the inside bar, but the chalk was basically just to further mitigate this range. The ranges were holding, so yeah, you'd want to see something far more convincing than that before looking to get involved. Yeah, even here it's like I'm quite happy to wait for the M15 shift before looking for sells in this POI, because even this here does feel like it's just sort of a bit of a sideways correction to push higher. And then here, obviously, unfortunately, we didn't mitigate the refine demand running. Here, none of these continuations went my plan. That one was probably the closest, but it didn't react. It didn't flip on into the left. So yeah, it pretty much just reacted to imbalance. So the M1 entry continuation model is mitigate, flip, and sweep. So it didn't flip on them, but it did mitigate this here, and it did sweep behind that low. So that was the closest one to meeting the criteria. But as I say, I rarely take M1 continuations, and if I do, they're usually directly coming off high probability POIs. I don't tend to try and get caught up in this here whenever prices sort of trend the upside, as price always pulls back to an M15 POI eventually. So that's it, guys. Hopefully I took some value from that. If you've any questions, Ronan, just tag me in one of the channels in Discord and I'll get back to you. Thanks, guys.